This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Our next accounting standard that we're going to look at is impairments. Impairments is covered by IS 36. Remember, you don't need to remember the standard number. What you need to be able to go through and do is know the rules within the standard and, more importantly, be able to apply them in any given scenario within your financial reporting exam. So whether that is as a multiple choice question in section A or as part of those 5 multiple choice questions in each bigger question in section B, or part of a published accounts question in section C. So it can be examined effectively anywhere. What we need to do with regards to the impairment is, first of all, let's think about what it is. An impairment is the fall in the value of an asset. We have it recorded within our financial statement. So whether that is property, plant and equipment at cost less accumulated depreciation to give its carrying value, or whether that is your intangibles at your cost less accumulated amortization to give your carrying value, we may need to go through there and carry out an impairment review to determine whether or not that asset has fallen in value. Now, the first step that we need to look at is whether or not there are any indicators of an impairment. Is there something there that is telling you that this asset could potentially be impaired? We're not saying that it is impaired, that will come in the second step, whereby we actually perform the impairment review and crunch the numbers. The first scenario that we look at is whether or not there is the possibility of the assets, so property, plant and equipment, or the intangible that we own, being impaired, being potentially reduced in value. So let's just go through and have a look at those indicators. They can be either external indicators or internal indicators. So here we're looking at potentially a multiple choice question saying which of the following is an indicator of an impairment, or which of the following is an internal source of an indicator of an impairment. Okay, so you need to remember the different ones and where they go. So the first one there in terms of your external is looking there has been a decline in the market value. Okay, so maybe you have some property prices have fallen, does happen, and therefore that the value of your asset has gone down. Okay, so therefore we would do the impairment review in step 2. Could be that there's been a change in the technological, economical or legal environment, so things that are beyond your control effectively. So if we're thinking about the UK currently, the UK is currently in the process of negotiating its Brexit terms and conditions. So is that an impairment indicator? So changes in the legal environment may also cause some change in the economic environment with regards to interest rates and inflation. Does that therefore then indicate that there could potentially be an impairment of your business? Okay. In terms of the internal sources, you've got there obsolescence or physical damage. So you've got an item of PPE and someone's driven a forklift truck right into your prized item of plant and equipment. It's damaged. Okay, so therefore we need to perform an impairment review. Okay, it could be changes in the way the asset is being used. So maybe you've restructured the business and therefore that asset doesn't produce as many units of goods for sale as what it previously did. It's therefore operating at a less capacity than what it previously did. So therefore, again, there could be a potential impairment and we need to perform the review. Okay, it may be that there's an impairment indicator and it isn't actually impaired, but this is saying, look, something's happened, internal, external, and we need to do the review. Okay, it could be that your economic performance is worse than expected. So maybe there's been a fall in your sales because maybe there has been some form of competition. One that you commonly see, particularly when you get to SBR and strategic business reporting, your old P2 paper. Operating losses, okay, a series of continued operating losses would lead you to perform the review. Also, net cash outflows, so you're spending more than what you're generating on the assets. And then maybe there's a loss of a key employee. So maybe the CEO has stepped down. Imagine Tesla, okay, CEO there, Elon Musk. Imagine if Elon Musk stepped down from Tesla. Would Tesla therefore be impaired? Don't know. We'd have to crunch the numbers, but he's a key employee, isn't he? Okay, he's got the ideas. He's got the pizzazz, hasn't he? Okay, that keeps that business going. Okay, if he were to leave, we might need to go through there and do an impairment review. Okay, so that's the first step within our impairments. Yeah, so we're going to perform an impairment review if there is an external or internal indicator of the impairments. Once we've done that, we can then go through and move on to step 2. And step 2 is then thinking about how this asset could be impaired. Is it actually impaired? Is there a reduction in the value? So we'll go through there and look at that within the next video.